Good morning, folks. Welcome to Quantsapp. This is Vicky Sajnani here. This is one of our sessions or the learning sessions for the essentially the markets, and we get a perspective and we learn certain basic aspects of how to go about looking at the different data points in the market as such. So that's the perspective which you get when you move along. Today we are going to be discussing about open interest, and essentially open interest is something which is an important data point along with volumes. So let's move on to the next slide. Volumes is essentially the total number of contracts which get traded in a given day, and volume figures are available for each traded day, monthly futures or weekly futures, whatever weekly derivatives in a market. Derivatives, of course, would be the options which are available, weekly options, to determine the movement of volume up or down. Essentially, chartists, essentially to look at the pattern as to whether it's going to evolve into a gusto move or not on the higher side or on the lower side. Chartists look at volume bars which are found at the bottom of the chart. So you have the price action on the higher side and the volume on the lower side. We would be looking at the pictorial representation at a later point, but that's what I was trying to highlight. Volume bars essentially illustrate how many shares get traded per period. So if it's a daily chart, essentially you have the bars which indicate daily volume. If it's a weekly chart, then the bars indicate the weekly volume. And that helps us in understanding whether there is going to be a substantial move on the higher side or not. One volume essentially indicates one buy and one sell. Usually it's a one-sided calculation which is done. So that is one trade, one buy and one sell, which is one trade. So hence one volume is, what is that? So volume is an important aspect in technical analysis because it is used to confirm trends and chart patterns. Now we are discussing this because volume is something which we ought to know before you move on to open interest. Any movement up and down with a relatively high volume is seen as a stronger move and more relevant than a similar move with a weaker volume. So if there is prices moving higher with a strong volume, then you know there's a larger participation which is coming in, and that is indicating that there is going to be a gusto move or continuation of the up move in essence. Therefore, if you're looking at a large price move, you should also examine volumes and also open interest. So that's the aspect which we carry. It takes two to tango. So clearly, price increase with volume increase is a bullish expectation. Price increase with volume decrease is a sense of caution, because the volume price is increasing, but volume is actually decreasing. So clearly, that is indicating that there is some amount of nuance which is getting on the weaker side, because there's not a large participation which is coming in with the follow-up price increase. Similarly, price decrease with volume increase clearly indicates that there is a large chunk of audience, or there is some large audience there which is bearish on the stock or bearish on the index or whatever the case may be. Price decrease with volume decrease clearly shows that there is a decreased participation with the prices decreasing. So that's again a sense of caution. So that's what we come up to. Now, open interest, that is the topic which is of discussion today. So that's of importance to us extremely as of now. Open interest is a number of contracts that tell you how many futures or options are outstanding open in the market. Always, as we discussed, always there are two sides to the coin. One is a buyer or a seller. So clearly, that's a nuance which you always have. So buyer is said to be long on the contract and seller is said to be short on the same contract. Okay. So one buyer, which was one seller, that matches, and you have what is called as one OI. That's what I've highlighted here. That's in this case, it's going to be one, because you don't count the buyers and the sellers. You only count either the buyers or either the sellers. And what is the position open? That's what is counted, not closed position. So you might do some trades intraday where you buy and sell. So what is your open position in that case? When you're buying and selling the same contract, same expiry, you're bought and you're sold intraday. So the volume will be counted as one, but then open interest is actually counted as zero, because you don't have any position for that day. So that's how you have to understand this. So there is one aspect which is volume, where intraday traders buy and sell continuously. And there is an open position which has been created by someone. So that open position is like, you can think of it like, in cash market, it's like the delivery position which has been taken. So delivery lekar gaya. So that's the aspect which you ought to understand here. So that's that. Now we see an example of open interest. So let's consider traders A, B, C, D. Okay. Now A considers that market is bullish. So A goes and buys 10 lots. So 10 long kar diya usne. And B also has done 10 long. But obviously there has to be a counterparty for that. That counterparty has been C, which is believing that there's a market extremely bearish. So they're going for 20 short. So what is the open interest in the market? So the open interest in the market can be evolved from here. 10. And then another 10. This is on the buy side. So that gives you a total of 20, which is highlighted here. 20. Similarly, you can count for the sell side position, which was established by C, which is again 20 short. So he's on the short side. So there is that's the idea behind it. So we are not discussing about volume here now. We are discussing about open interest. So that's a perspective which we get. So I'll just look at, if you're enjoying the session, please put a thumbs up in the chat. That would help me in understanding that you are understanding what the concepts which are being taught here, and there is enough clarity out there. So please go ahead and put a thumbs up in the chat, which will give you a perspective. I'll have a look at the chat also as to see if there are any questions coming up there. Yeah. So let's look at the example again. Now, day one, we said A was long 10 lots and B was long 10 lots. So the open interest is 20, right? On the long side. Similarly, obviously, I mean, there's a corresponding short position, which was 20 short by C. So that's brings the short position or the short open interest to 20, long open interest to 20. So open interest is 20 in essence. Now, A and B maintain their positions on day two, and C what does was squares off the short and reduces it to 10 lots. So you have 10 short there, but then that 10 short has been taken up by D. So clearly, I mean, there's a volume created here, but the open interest doesn't change. The open interest is constant 20. If you notice that on day two. So this is an example which is clearly suggestive that there is some volume happening, but there has been no change in open interest. The open interest has remained constant at 20. Now day 3. For day 1, we had an open interest of 20, which was 10 long from A, 10 long from B, and 20 short from C. Now in day 2, C went ahead and squared off 10 lots by buying, and the short position was created by D, which is a new participant. So that's what day 2 happens, is OI is 20. Okay, so that's how it works out. Now on day 3, A goes ahead and buys 5 lots. B goes ahead and buys 5 lots. And then C goes ahead and buys 10 lots. So what is the position created so far? See, because the A was already 10 long, so 5 long have been added. So 15 long is A's open interest. Similarly, B's open interest, 10 long, and therefore 5 longs have been added. So there has been an open interest of 15. That's what you can observe from here. I'll just mark it for simplicity. So there has been a buy position created here, 5 lots, which resulted in plus 15 for A. Okay. Now we'll study for B. B is having a 10 long, open position from day 2, added 5 lots. So B's open interest jumps to plus 15. Now C was 10 short. You can see that from here. Day 2, 10 short. Now C goes ahead and squares off. So you have 0 lots here. So how many longs have been created for C? The open interest is 0. Open interest is 0. And during the day, there have been 10 longs. 10 longs from A and B and 10 longs from C. So that 20 short positions have come in from D. So D was already 10 short. You can see that. D was already 10 short and added 20 short further. So D's position becomes minus 30. So you have plus 30 long and minus 30 short. Open interest works out to be 30. Okay. I hope that's clear with everyone. And if you're enjoying, please put a thumbs up. Yes, I'm seeing a lot of thumbs up out there. And thank you so much for that. If we can continue, and live markets is something which we do cover at different times in by Quantsapp. That's on Wednesdays and some other days also. And then we have our option certification program and other programs where we cover live markets with trading angles. I mean, technical analysis and option tools essentially in live markets. So now we move on to, we just noticed that what open interest was. So clearly, I mean, we understood what open interest was as number of open positions in the market, whether it's from the short side or whether, now we couple it with the price action. So when you notice prices are increasing, which means earlier we used to say prices are increasing, it's bullish. So let's see how it collaborates with open interest and the pairing of the two. So if price increases and open interest is increasing, so longs are entering the market with new participants. So that's why the open interest is increasing. You can think of it that way. So as open interest is increasing, there's new participation coming in the market and prices are increasing naturally. So that's a long built up. So that's indicated there. Please look at the color coding. The same color coding is on the app also. So this will enable you to understand what is happening on the app front also. So prices increasing with open interest increasing is a bullish bias because new participants are coming in. There's a buying interest coming in and there is essentially a long build-up. So that's a bullish scenario. Now, if prices are decreasing, look at the third shade from here. This one, this case scenario. Prices are decreasing and open interest is increasing. What does increase in open interest suggest? Increased participation. Now, where's the increased participation coming on? The increased participation is coming on the short side this time because prices are decreasing. So someone is aggressively selling. So the prices are dropping and still there is open interest participation, new participation coming in, which is making the prices drop further. So that's a short built up. So I hope you understand it's given with a red connotation that short built up is happening in this case scenario. Because open interest increase is new participants coming in, new participation happening, and prices are decreasing. So that's what that is. So I hope this is clear so far. We have discussed bullish case scenario and we have discussed the bearish or the short case scenario. Now, let's look at it. Prices are increasing. Prices are increasing and open interest is decreasing, which is the last case scenario. Prices are increasing, which means there is buying interest coming in. But open interest is going away, it's dropping. So clearly, open interest नीचे आ रहा है, prices ऊपर जा रहे हैं. So there's a buying coming in, but there is participants leaving the game. So what does that signify? That signifies that someone is buying, but that buying is more of a square off. So when would you square off a position using a buy position? It's naturally if you had a short, you would go ahead and buy, right? So the short is getting covered. That is what is called short covering, which is highlighted here. Okay. Any questions as of now? I'll just check the chat room also. We would be discussing about call OI, put OI, have patience. As of now, we are discussing futures position. So we clearly, this is more from the futures angle, which we are covering. But then we would be covering more of call OI and put OI also. Okay. But so far, I think things are going steady. So we have covered what is an open interest. Firstly, we started out with volumes. What is the total participation which is happening in the contract, which is typically given by a bar diagram below the prices, right? So that was what was volume. A volume increase is essential whether the prices are going up or down. So if the prices are going up with the good volumes, then we know that that's a strong trend because a lot of participation is coming in, right? So when the prices are going down with the volumes also going down, which indicates less number of people are shorting the market or selling in the market because volume is going down. So there's a lack of participation. That's a sense of caution. When the volume is good and prices are falling, that means that's a selling market. There's some strong players and there's a large size players are selling in the market. Maybe it's institutions, maybe it's block trades, whatever the case may be. Large blocks are getting traded. So that's what. So we need to know the volume. Then we moved on to open interest. There could be a volume. We noticed that there could be volume, but the open interest could remain stagnant because open interest, it signifies the number of open positions in the market. And clearly, that's what we're trying to highlight. And the open positions which are not settled as of now, that's what gives a perspective of new participation coming in the market. Now, if prices increase, and new participation also increases, which means OI is increasing. So it's a bullish case scenario. If prices decrease, but there are new participants coming in, which means OI is increasing, that's a bearish case scenario. Now, if prices increase and OI is decreasing, which we are discussing right now, you have a short covering. Because the prices are increasing, which means buying is coming in, but buying is coming in at the cost of someone exiting the market. So someone ने किसी ने पहले short position create किया था, वो अभी जाके buy कर रहा है और square off कर रहा है. So that's what it's called, short covering. So that's more of a pause or a neutral stance. Okay. So that's what that is. Now the prices are decreasing. मतलब शॉर्ट्स आ रहे हैं मार्केट में, अभी आ रहे हैं कि स्क्वायर ऑफ है वो देखना पड़ेगा. ओपन इंटरेस्ट आल्सो डिक्रीजिंग, सो व्हिच मींस कोई सेल कर रहा है पर निकल भी जा रहा है मार्केट से, निकल भी जा रहा है, मतलब स्क्वायर ऑफ कर रहा है. इसका मतलब वो दैट पर्सन ने टेकन अ प्रायर लॉन्ग, पहले लॉन्ग किया था, लॉन्ग को अभी अनवाइंड किया बाय स्क्वायरिंग ऑफ विद अ शॉर्ट पोजीशन और सेल पोजीशन. तो मतलब एग्रेसिवली सेल करके लिक्विडेट कर रहा है positions. So that's a neutral stance in the overall cycle of things. When we discuss about long unwinding and then short covering, typically you have long built up, some amount of long unwinding, then again a long built up, then some amount of long unwinding. Some interspaced short positions might come in depending on the case scenario, but typically the cycle looks like long unwinding, long unwinding. Then there is a possibility of it's a short covering. We'll have a look at it pictorially. So this is long, which I highlighted to you, which is visible in the chart as such. This is a long unwinding which has been highlighted to you. After a substantial long, you have some squaring off which happens, which is a long unwinding, pressure on the prices. So you have short coverings also where the price increases. Okay, when the price increases, so you have price increasing at the cost of participants going out, which means OI decreasing. So that's typically a pause which is indicated as a short covering. I'll just highlight to you out there. This is short covering. This is long unwinding here. So that's how this is a typical price action which looks like this. Okay. So shorts. So the major way which is typically happens, or a large size move which happens, is fresh shorting which typically happens in the market. So you have a large size move. Okay. So that's how this is structured in some sense. So I hope you're getting where we are standing at. Yes, we would be discussing about call OI and put OI and so on and so forth. So please have patience. And for our participants, we have that 2-day Pro Plus promo code, which is highlighted at the top end. The promo code is YTube. You can use that for your 2-day Pro Plus membership of Quantsapp. So towards the end, I shall show you that how we go about entering the promo code in the app. Okay. So this is long unwinding. So long unwinding doesn't mean you go ahead and short at that point or go long at that point. It's just a pause in the overall scheme of things. So it's a small wave compared to the larger wave which is happening. So we ought to participate, as I've highlighted here, that it's a temporary phase. Okay. So that's how we are positioning it. Now, look at the open interest built up. We shall see the same thing on the app also. but this is some screenshots which I've taken last night. So when you go to built up and script and instrument, you shall see this aspect. I shall just show you in the app also. So we can go to symbol and built up, and you see the same screen which I had shown you on the slide. Okay, so I hope this is visible to everyone right now. So this is our screen, essentially talking about Nifty, Bank Nifty, short covering. So you enter the symbol at the upper end. Okay, otherwise you'll get the whole list of stocks. So if you just want the Nifty, then you just type in Nifty at the search thing, and then expiry, you can choose the expiries which you want. So you can take 28 July. Okay, and it will show you the different cycles, long unwinding, short covering cycles essentially. So that's visible here. And then sectors, you have sectors here: auto ancillary, bank, Nifty stocks, cap goods, cement. So you can go sector wise also. We'll have a look at some of the aspects there. And the breadth which is given from the market is indicated here: long 57, long unwinding 40. So that's what that is. Short is 42 and short covering is 57 again. So when you add together, you will add together long and short covering together, long unwinding and short together. You can have a perspective of that how the price rise is happening on the either sides. Okay, so long is 57 and short covering is 57. So there is some amount of short covering which is happening at the cost of longs. So that's that. And that's giving you a perspective that the markets are going up. I was just looking at the chat room and looking at some of the queries which are coming up. Yes, you can put OI on the chart also, price chart. So that's possible. We'll see that later. As of now, looking at this, so clearly, I mean, this is how it looks like. And price, you are seeing short covering in Nifty. So short covering means prices moving up, right? As we discussed, and open interest decreasing. So that's what is visible from this price action. So 0.48% is Nifty's price action, which we are seeing. It's highlighted here. I'll just give you for a second. And the OI is minus 5.99%. So you have short covering in Bank Nifty also, which is 0.55% price action, and minus 3.81% is the OI price action. So that's that. And then you can see a list of long stocks, which is giving you a perspective how much is each, more of a statistics kind of a perspective. Let's look at sector wise. Let's look at just an example of say auto. So you can get a perspective that M&M is on the long side, most of them on short covering, and there is some amount of shorts coming in Ashok Leyland and Maruti. Now, if you were to look at the future OI, historical can also be seen here. So this is the Nifty historical future OI picture, which is You can change the script here on the left hand side where the magnifying glass is there. The search and choose a date from which you want your data to be visible. So I could change the date here to about 1st April. So you get the data populated from 1st April onwards till date. Okay. And then OI is there. And then you can look at the color coding, which I showed similar to the ones in the chart. Long unwinding is blue in color. Short is red in color. And then you have short covering as a more of a yellowish tinge, where greenish tinge is the longs. So you clearly am seeing some short covering as pointed out. And prior to that, there are a set of longs which came in, except there was 1 day of short. So you would have intermingled short cycles in between. Earlier on, when the prices were collapsing, so you see a large set of short OI, which is indicated by these red bars. I hope you're getting that. So now we are getting a set of long signals, in the sense that long OI is something which is populating the screen a bit more than the short positions. Excuse me for that. So that's that. Now looking at the open interest, you can also look at the open interest from the synopsis page, where you have futures OI. And then you get a perspective that what are long stocks. So you get a set of long stocks which are in the order. And then there's a pie chart here which gives you the summary. So it gives you long 62, unwinding 32, 51 short, 53 short covering. So that's a futures perspective. And then, long unwinding, you can look at the long unwinding stocks. GMR, Infra, Midcap Nifty is long unwinding position. Crompton is in the long unwinding position. So you are seeing some amount of, not a sharp sense in terms of OI, but I mean, in terms of price, but OI is something which is collapsing rapidly over there. And then let's see, IDFC First Bank is something which you can see prices are minus 1.47%. OI is also dropped in that case. So this is long unwinding. Prices are going down, which means the sellers are active in the market, but the selling is happening at the cost of OI decreasing, which means participants are reducing. So that's the long unwinding. And then similarly, short covering is something which is visible here. So that's a bit of statistics there. Like you can see, LNT price has moved up 4.5%, and the OI decreased by 3.18%. So that's the perspective which we are getting over here. So that's that. True built up. Someone asked for the true built up. True built up is seen typically when the price action happens intraday. There is a large move in the price, and you're not sure whether there was a long positions added or short positions added. Prices gapped up so sharply and then moved lower. So that's when you would want to see true built up and see the nuance what you're getting out there. So that's what that is meant for. So that's that. So we had a look at the built up in some sense. We had a look at the synopsis. Now, the open interest can be studied from an angle of options end also, and we'll be looking at that as of now. So this is the short screen which shows BHEL in Torrent Pharma and Cummins and so on and so forth. And then you have futures OI, which I put a screen of that of Nifty as pointed out. Let's look at the open interest from the options perspective. Now, in case of options, we know that there's someone who's buying call option, there's someone who's buying put options, then there are sellers of call options and sellers of put options, as clearly indicated that, okay, you know what, there is buyers on one side and sellers on one side, and you clearly have a matching. But we count the open interest only from one end, which is either the buyer of the call option or the sellers of the call option. So the total open interest is calculated, and that is displayed on this graph here graphically, which gives you a pictorial representation of where the prices could take resistance or support. Okay, the max OI, the strike at which it happens, is indicated here, and that is what we'll take a live. We'll take it on the app also, so it gives you a perspective. Open interest. You go to open interest here, and you have Nifty. And remember, in case of OI, the logic, what we take is from the seller side. Because if someone is writing calls at a particular level, writing calls is taking unlimited risk. If someone is writing puts at a particular level, then that person is also taking unlimited risk, right? All they pocket is a premium. So there is a perspective in the market that these people are knowledgeable, or these people are, there is some awareness, or there is some calculation done. Primarily, it's some calculation done by the entity before they go in and write options, right? So that's a nuance with which you move ahead when you attack or when you study Nifty open interest perspective as such. So when you're looking at the Nifty here, it's quoting 16,213.80, thereabouts a fair price. So this is for 14 July. And you move on the higher side, you're seeing the max OI at close to 16,900. But intermittently, you see these long bars, green bars. So these are all the calls which are written. And the color coding is if it's a filled one, if it's a filled bar, so you have a highlighted fluorescent green, and then you have a filled bar. And if it is a filled bar, that is a call addition, which is indicated here. I'll just highlight to you for a second. So you notice this call addition. Similarly, call unwinding is a hollow green bar. So that's visible here, this point on the chart. So there is a hollow green bar there. And put addition is again a red bar, and a hollow red bar is something which is showing put unwinding. Okay. So I'll clear most of these things. So that's what is visible here. And then when we enlarge it a little, so here is something which we saw 17,000 was the call open interest. Intermittently, you can see that there is substantial open interest at 16,500. Okay, calls. And the same thing can be seen in a tabular format on the right hand side, where you can see the put OIs and call OIs at different levels. Okay. So that is something which is visible. Say, for example, we were looking at 16,500. So let's have a look at that. $16,500. Okay. Let's study that OI position. So 388,87550. That's visible on both you can see that on the tabular front, as well as you can see it out here on the graphical front. So that's the kind of open interest which this call option is carrying, which means that many call writers have written. So they are of the view that it's not going to break 16,500 and go higher. So many people, so many participants, or in other words, so much, if we were to convert this into lots, so many participants have taken position depending on the fact that, okay, it's not going to go above this. And if it were to go above this, then we would see some amount of unwinding. That's what we have seen here in this strike on the lower side. So I'll just shift it on the lower side. You can see this call option here, and I'll just mark it for you guys. This is the one. Okay, you're noticing that there is a call unwinding because the prices went ahead and moved here, crossed this level, and then now are quoting at this point. So there has been an unwinding in calls. So this unwinding of calls happens. Why? Because the prices are going higher, and this unwinding further aggravates. If it's a call unwinding, it further aggravates the momentum on the higher side. So that's a sense which we ought to understand, that it's all from the writing perspective, call writer or put writer. So from that angle, we are studying these open interest charts. So now on the strikes, 15,900 thereabouts is the put OI. Let's look at the some perspective on the puts. So 16,000. You are seeing 1060,300. That's the kind of OI which is out there on the call side. And then there are 44, close to 45 lakh put OI is there. And that is going to be acting as a support, because put writers believe that 16,000 is not going to be breached that easily. So that's why there is a large size position which has got added out there. So that's the sense. So this gives you a range. On a daily basis, you can understand that this gives you a range on the OI front, and also you can manipulate with the date. So here you have a date bar. I'll just go and change. If I want it from 1st of July, so I can choose 1st of July here and set it. So you get a different picture. So I can get a perspective as to from 1st of July, what has the OI picture been for the 14 July options. So how's the picture looking like? So that's a perspective you get from there. So that's that. I hope everyone is understanding what we are talking about. So if you're understanding and enjoying the session, please go ahead, put a thumbs up. Also, this, as we highlighted, that there is a 2 days free workshop, 2 days free promo of Quantsapp Pro Plus, which is YouTube is the promo code for it. So you can use that. Let's now move on to our presentation. Okay. This is the open interest option chain, which is visible. I'll just highlight to you where it's where you can get this option chain on the Quantsapp. You can go to home, you go to chain. Option chain is here. And then you can also see the OI bars. That's what I wanted to highlight. So you can see the OI perspective, even from the option chain, where you have different Greeks highlighted to you, also the volume highlighted to you. And you can see the open interest bar representation with the green showing the calls and the red showing the puts, essentially. So that's it will give you additional inkling as to when you're seeing the charts and watching the Greeks. You can also get a perspective on the OI as to what is happening on the OI front. This is all live during the live markets. So you get a perspective of what's happening in the options trade. Of course, Greeks and other aspects will be covered in a different session. But as of now, our focus has been open interest. So that's the perspective which we are carrying as of now. In case you're not able to use the promo code as of now and you're a fresh user, please connect with our support desk. They would be able to help you. But I think you should be able to use it. go over here, which is your login ID, and then have promo code, and then you type in YTube here and press apply. And clearly, I mean, you can do the needful. I already have the Pro Plus at my end, so it won't function on my terminal as such. But on your web application or mobile application, it should be able to work. So that's that. And let's go back to our presentation and see what is the nuance at our end. So most important aspect of option chain is to learn and read OI at different strike prices. As an option trader, we need to focus more on strikes with highest OI of call and highest OI of put. I have already discussed that. So highest call OI and highest put OI gives you the range for the stock or for the index or so on and so forth. Highest call shows the consensus that call options are willing to keep the market below that strike. Why? Because there is a large set of call option writers which will say that, okay, you know what, this is the level, or it somehow evolves. You know, there's a large set of audience which is saying that, okay, 16,500 is not going to get breached probably, and they go ahead and short that option. So that indicates that extra bar which we saw, a large bar on the chart which was visible. Similarly, highest put OI shows a consensus that put options are willing to keep the market above that strike price. So that's a support. So I would just add on here. Resistance. And this is support. So your highest call OI forms your resistance, and similarly highest put OI forms your support. So that's how we look at it. Okay. So I'll just clear this for the time being. This analysis helps us to find the range in which the stock is likely to trade for the current expiry. It is helpful for the weekly index futures also. So you get a range based on OI. So that's that perspective. So this is how we look at it. Highest call OI works as resistance. Highest put OI and the strikes work as support. So that's how we have looked at it. And these hollow candles or the hollow bars indicate that there is some amount of unwinding which has happened and prices are crossing that, and they could cross further. So that's an important perspective to carry. Now, if the prices are close to the resistance, which we call as the resistance, call OI, and then they're about to breach that, then clearly, I mean, we know that it's an important level. It's getting breached. So there could be an unwinding. And the pace of that unwinding would then determine how fast prices would head higher. So that's what we need to understand from the call end. Similarly for the put end. So the put will be bearish. There's a put unwinding happening at the support zone, which we had earlier seen. So there's a put unwinding happening. There's a hollow created there that clearly shows that there would be pressure on the prices. And the pace of that would determine the pace of fall of the prices. Yeah. So then lastly, there's something called as put call ratio, which is a food for thought for everyone. So clearly, I mean, that's what OI put call ratio, which is nothing but the put OI, total put OI divided by the total call OI is a ratio. So it's a total put OI divided by the total call OI. So we also have the volume put call ratio. We have the OI put call ratio. So there are two types of put call ratios, but we are discussing here OI put call ratio, which is essentially the OI. So let's have a look at it on the charts or on the app as such. Just give you a flavor of that. So you can go to OIPCR historical. So this is how the graph looks like. As the put call ratio heads higher, a local maxima is hit and the prices are elevated and the prices drop. Then you see futures prices dropping and the OI also drops. Why is it so? We'll just get a perspective on this. If there are large set of put writers and there are few call writers, so what does the market indicate? What does it indicate? That the call writers are not willing to take the bets. And put writers are taking bets. So market will head higher. Because put OI will be high, call OI is low, so ratio will be on the higher side, right? So that's the perspective which we carry. So this gives you a perspective that the puts, there are large put OI, large put writers and a few call writers. So that's that. Similarly, when there are a large set of call writers coming in and there's a small set of put writers, which means it's a bearish nuance because OI is decreasing. But then we need to use this as a contrarian mood indicator in the sense that when the PCR, OI PCR is at peaking up, it's at a peak, which means there's a large set of audience which has gone ahead and written puts. And there's only very small call writers. So put call ratio is very high. That's a time you can take a contrary trade in the sense that we know higher put call ratio means higher price action. But then in this case, we are seeing kind of a peakish or peaking kind of scenario. So that's when you can short the market on a high put call ratio, high peak put call ratio. Similarly, on a trough put call ratio, you can buy the market. That's the idea. I hope this is clear with everyone. Any queries on put call ratio, you can put forth right away right now. I'll have a look at the chat room also. So that's that. And let's go back to our presentation. Used as a relative indicator to judge the sentiment of the market, as I said, and the put call ratio is a measure of how many puts are trading with respect to how many calls. So the contrarian can attempt to quantify his measurements. So in the sense that, when you know that put call ratio is hitting a peak and it's going to reverse from there, you can take a contrary trade over there. So that's that. So that was pretty much it. And this is the QR code for us to give you you to give us reviews after you use the app. Please do scan the QR code and give us reviews on the site, and this would enable us to improve further and further, and also encourage us to give more learning sessions to you guys and give you a perspective on a Saturday as to how things happen on a very basic nuts and bolts level. So that's the idea. So I pause here for some questions and just see that if there is any perspective to it. We are running out of time, so that's that. Yeah, someone has asked why PCR is a contra signal. So it's not a contra signal, it's a correlated move. But when a peak happens in put call ratio, that's when you want to short the market. And when the trough happens in put call ratio, that's when you want to long the market. That's how the trade can be taken, or the system can be designed around this. That's how it is evolved. That's why it's called a contrarian indicator. I hope that answers your question. This is live. During live markets, it gets updated live. So that's the perspective which we carry. So that's that. So folks, that's all from my side. and wish you happy trading on Sunday, and all the best, and thank you.